I'm joined by Mary. And Mary, first-time podcaster with us today, but long-time Prosperouser, aren't you?
I am. I'm actually the longest-serving member of staff in Prosperous.
Except for me.
Apart from you.
Yeah. And tell us what you do in Prosperous. Tell everyone what you do in Prosperous.
I am the numbers person. I run all things finance-related in Prosperous.
Okay. So no pressure. You're in a financial planning firm and you run the financial planning firm's numbers.
Yeah.
While we run numbers for all the clients.
Exactly.
Okay. Excellent. So we're going to go through a few questions today. Let's get stuck in at the start, right? Let's go with the first question.
Hi, Owen. My question is, should I clear my debt with my savings or keep my savings and chip away at the debt? Thank you.
This is something you see a lot, I guess, on your Instagram questions. So the trade-off between savings and debt.
Okay. What I would say is when you have enough savings to clear off your debt, you probably need to go a little bit further. Okay. My big fear is if you've got a lump of savings and a lump of debt, and you use the lump of savings to clear off the debt completely, you then leave yourself with zero savings, okay? And assuming this person's going to leave themselves with zero savings. And then next week life happens. And the washing machine breaks down, or you need to replace the car, or something else happens, and you end up borrowing money in a panic, which probably means, as I said at the start of today's podcast, the easier it is to get the loan, the more expensive you'll expect it to be. So if you're borrowing in a panic, you're going to go for the easiest route and you're going to pay more money than maybe the loan. You're going to pay a higher interest rate than maybe the loan you've just cleared off. So what I much prefer people to do is adhere to their buffer rules. And we've talked about buffer before, but adhere to their buffer rules. And if you're clearing off a loan, make sure you're clearing it off in full and you've got a bit of a buffer there so that when life happens next week, you're not panic borrowing. Does that answer the question, Mary, do you think?
It does, but I'd be curious to know, do you give the same advice regardless of the type of debt? So, like, I'm thinking cost here. So the difference between a credit card debt and maybe a credit union loan.
And this is where the long term and the short term comes into it. Now, so say, for example, you've got 10 grand in savings and 10 grand in debt, and 2,000 euros of that is credit card debt, and 8,000 euros of that is a car loan. Absolutely take the 2 grand and clear it off the credit card because it's much more expensive. But if you're going to wipe yourself out completely with a loan that's 6 or 7% and it's going to be wiped completely, I'd like you to get a little bit ahead before you do that because it just makes much more sense. On the flip side, I'm not a fan of paying a little bit extra off loans. In general, I'm not a fan of paying a little bit extra off loans. There are circumstances where you've tried it all before and there aren't, and I'm going to cover that at the end of the podcast today in terms of some of the routes you can go. But in general, paying a little bit off a loan doesn't give you the same emotional benefit of paying a loan off in full does.
And would you say that for a mortgage? It's
Yeah.
I suppose a common question we get, particularly when we're getting inquiries from prospective new clients in Prosperous. People who have maybe a bit of savings built up or they have a bit of wriggle room in their monthly finances. The first go-to idea is, should we be overpaying the mortgage?
Yeah. And that's a much more clear-cut one, right? If you're exhausting all other opportunities with your savings and you've got your extra cash and you've explored all the other opportunities, you're maximising pension contributions, you're doing everything else that you should be doing with your money and you've nothing left to do with your money, go for it, clear off the mortgage. But it should not be your default. It absolutely shouldn't be your default. It should be your option of last resort because in general, mortgage lending is the cheapest lending you're ever going to get. There's a nice rule of thumb that I like to use, and it's kind of changing at the moment because interest rates are going up on mortgages. But if you take the mortgage interest rate and double it, so say you're on 2% and you double it to 4%, right? Think about, could I get 4% or more with that money somewhere else? Now, that was grand 3 years ago. Today, if you're paying 4% in the mortgage and you double it to 8%, well then, now I need to get 8% on my savings my investments in order to make it financially viable to do that. So what I would say is I would still be of the opinion paying an extra bit off your mortgage has very little emotional benefit. So keep having the mortgage come down on a month-to-month basis with the standard repayments that you're expected to pay and build the savings up on the other side, and you will get to a point where there's enough in the savings to clear off the mortgage. And then you get the emotional benefit. And you've kept all the financial options on your side of the table between now and then, and you're saving a whole pile of interest on the mortgage because you're clearing it off early anyway.
So the next question came in by text, and I'll read it out for you now, Owen. What are the chances of getting a mortgage after insolvency? The listener says they were discharged in 2021.
Okay. The whole purpose of insolvency and the insolvency legislation is to give people a second chance. The legislation is designed to say, you know what, you've had a difficulty, you can't get yourself out of it, we're going to move in with the law and protect you. And we're going to try and get you out of this. And if you get out of it, you deserve a second chance. That's the whole concept and ethos behind the legislation. The reality is, and one of the things that always frustrates me is when people fill out an application form, it says on the application form, have you ever been declared bankrupt or insolvent or whatever else? And there's always that thought in my head, why do you need to know this? Because we can't ask a question of a client without giving them a reason, or we have to have a rationale as to why do I need to know this? And that should be even stronger again in credit. If I was a banker, I'd be saying, my defence here would be, oh, hold on a second, we're not going to use it against them. Well, then don't ask the question, right? So either you need to know or you don't need to know, and you're going to use it against them, you're not going to use it against them. And what I would say to this person is they deserve a second chance, and they've taken the process and they've taken the legislation, the process that's designed to give them a second chance, and they've done what they've needed to do, and they do deserve a second chance. I just wonder what the real life feel is for it out there and what actually is happening out there. And you know what? I think there is never a better way of finding out how this works in practice than asking people themselves. So what we're going to do, what I'm thinking of doing now here is, I think when this podcast goes out, we're going to put a question box up on my Instagram. And the same way we do on a Saturday question box, you'll be able to tell me your personal insolvency experience or your bankruptcy experience or whatever process you went through. You'll be able to tell me about that and tell me, I want to hear the success stories about, oh no, a couple of years later, I was able to get a loan and I was okay, and that's what it is. When it comes to people who have had problems with debt in the past, the message is always the same. When you go to the bank, say it to them, and I'm not necessarily talking about someone going through insolvency. Say it to them, because they're probably going to find out about it anyway.
Get out in front of it.
Get out in front of it, say it to them, tell them this is why it happened and this is why it's not going to happen again. And you put your best foot forward there. You're on the back foot if they're coming after you. So, and that's kind of contradictory to me being annoyed with the fact is, have you ever been insolvent before? Question is usually on the application form. But I do think own it, explain it, and show them it's not going to happen again is the best chance that you have there. But I'd really be keen to hear from listeners. We'll put something up on Instagram and when this podcast goes out, and just give us your comments and let us know how you got on with it. We'll keep your name out of it. You don't need to share the fact that you've been through insolvency. But I do think it's one of the things I love most about Instagram, and particularly the followers on Instagram, is when I'm sitting there in the evening, I'm scrolling through and I have listeners learning from each other or followers learning from each other. And let's use the power of that to try and help this person out.
Absolutely. All feedback will be most welcome on the day.
Let's go with the next question.
Hi Eoin, I was just wondering what your intake is on the Klarna app. I have tried using it now for a purchase I made. I'm a bit nervous about it because I'm not sure how it works, or will there be interest? Thank you.
I have to say, I had to go to Google yesterday to find out what this app was, but it's paying by installments basically.
Yeah. So basically, and this is something that's come very hard and fast at us right now. We've a couple of providers in the market. You used to have a thing that you'd walk into the big electrical stores and they'd say, pay over 9 months or interest free for 9 months. And this is the new age version of this, right? Where basically you pay over 3 installments. And if you pay over 3 installments, you won't be charged interest. Okay.
Kind of like clearing the balance on the credit card every month.
Yes.
Yeah.
You won't be charged interest. And actually what's happening in the background there is, and I'm not talking specific about Klarna here, but the model that's sold to us is, no, you know what, we get paid 1 or 2% by the retailer because you bought using the Klarna app, and we're just going to collect it off you interest free because we've been paid for the money already. And the problem that happens is it's incredibly easy to get these loans. And they are loans, right? It's incredibly easy. You will be fine if you make the payments every month for the next 3 months, right? And you get it cleared and it's done and it's dusted. But if you hit into difficulties, that's where you start. Like you miss a payment, or it's just a problem with the direct debit. You don't realise it because they're typically smaller payments, right? But it's also, the other big problem is the accessibility to this. You could have like 15 different Klarna loans going along at the same time.
That's what I was thinking. If a one-off is one thing, but if this becomes your way of doing things, then you're never paying in full at the beginning, and then the amount can accumulate.
And let's be really, really simple. If you can't pay for it this month, if you can't afford it this month, you can't afford it.
Yeah.
Right? Spreading it out over 3 months because it's available to you is not making your financial situation any better at all. In fact, you're giving yourself a false sense of security. You've got a new TV or you've got a new whatever it is. And believe me, I know someone who was buying a first-time buyer who was buying a house recently, And they said they could have literally kitted out the house from top to bottom with one of these buy now, pay later loans. And they are incredibly accessible. They're incredibly easy to tick the box on. They're very much encouraged whether you're online or in a shop, in a retail shop, a physical one. And my fear here is that we are absolutely storing a massive problem up for the future, particularly as inflation continues to do what it is and people feel the squeeze. I'll just do it this time, and then I'll just do it this time, and I'll just do it this time. It's no different than Niamh earlier on who was talking to us, was just do the little ones, and the little ones don't matter. But what she actually said herself was, and I know you haven't heard it yet, Mary, what she said was she had big loans and then she did little loans, and the little loans didn't seem as damaging as the big loan did, but then the little loans added up. And this is exactly what buy now, pay later has the potential to destroy us with, is a death by 1,000 cuts.
That's great. So do you really need it now?
Do you really need it now? And can you afford it? If you can't afford it today, it's probably not for you. And if you are in it, make sure, if you have collected a few of these loans from different providers, make sure you have a list of them, make sure you're making the repayments as they are due, and make sure that if you've got a few of them in particular, take out a pen and piece of paper today and write down how much you have outstanding and how much the repayments are, and look at the bigger picture instead of the individual pictures that seem fine. Mary, thanks very much for coming into us.
It's been a pleasure. Thanks for having me.